Hey everyone, me Kevin here. Here's what you need to know for February 13th. There's a temporary and long-term staffing agency called Randstad. They own Monster.com. Bottom line, they're like, hey, everybody's so freaking optimistic about the economy right now, but how come that's not showing up in hiring data and what companies are actually doing yet? Quote, top executives at the world's largest employment agency by revenue said that they were seeing a disconnect between sentiment and reality in the United States, with businesses talking about a strong jobs market, but recruiters not seeing a surge in hiring yet. Now, in fairness, it's possible that we've got to get through the seasonal layoffs first, and then maybe we'll see a surge in hiring again as the economy booms. In fact, Ned Davis is jumping up and down because right now they say we're at the lowest recession odds since October of 2021. Which is interesting because that was basically right in front of the peak of the market. So then you wonder, like, if we're at the lowest since anyway. They're recommending a 70% allocation to stocks, 15% overweight compared to usual, with only 20% for bonds and 10% for cash. This comes at the same time as Bank of America is like, and we've heard this argument like for an entire decade already, but they're bringing it up again. You know, passive funds are really reducing reliance on fundamentals and diversification. You know, passive funds are 54% of the market, and the top 5 stocks of the S&P 500 account for 25% of it. This is crazy. Okay, but also those top 5 companies are making money hand over frickin' fist. Like, the amount of earnings that are going into US companies right now relative to the rest of the world kind of makes sense why valuations are skyrocketing in the US, because the earnings power is crazy. And you should see AppLovin. Now that, talk about massive PP over there, but we'll hit that in just a moment, unlike Trade Desk. You don't even want to know what Trade Desk said in their earnings call, okay? It's bad. Let's just say part of their company plan is we'll do good when Google shuts down. I kid you not. But so think about this for a moment. We're in this really Goldilocks environment right now where the economy is essentially expanding, at least from all metrics that we could see. I mean, earnings at so many different companies are beating in explosive manners. Yes, we've got this potential for an increase in layoffs one day. We're not seeing it yet because even the Wall Street Journal on the front page of the Wall Street Journal website today talks about how, hey, 65 to 75,000 people from the federal government are going to take the layoffs that Trump is offering. They take those layoff deals and then they go look for other jobs, and they quote interviews from hiring managers of companies that are like, dude, we've had like 60 Fed boys show up for jobs and we just don't have that many jobs to give them. And they sort of balance this by saying, it's okay though because local governments are hiring, like police departments and cities, and they usually hire later in cycles anyway, so maybe that's okay and it'll sort of balance out. I don't really know what to believe, but I will say some things that we know with certainty right now are, with the exception of tariffs, optimism is really, really high, and valuations at companies are very, very high. But some companies are also just printing a lot of money. And part of that could be because of this boom in AI spending that we've seen. And I thought of a funny irony. The funny irony is, what happens if you basically spend hundreds of billions of dollars, maybe even trillions of dollars on artificial intelligence infrastructure to generate, a fraction of that in revenues? Because sure, maybe it makes everybody a little bit more productive, but it doesn't make us a lot more productive. To the point where AI productivity doesn't actually lead to layoffs. It just leads to us working with AI and getting a little bit of a 10% productivity boost, but it's not strong enough to lead to layoffs. So you kind of get the best of both. You get companies throwing billions of dollars into essentially GDP increasers, but then not laying people off because they still need people because the AI just isn't that good yet. You still need a human with AI to actually do real work. It's kind of funny when you think about it like that, because that's a pretty bullish outlook, actually. Like, that's not to be bearish. That's actually a bullish outlook if you think about it. That's good, because if companies aren't going to lay people off, then you're not going to walk into the recession landmine. And then maybe Ned Davis is going to be right, where they're saying like, hey, the odds of a recession right now are extremely low. Now, they, according to them, spiked to like 40% back when we were in August, which was interesting. I mean, you could see the chart. I'll show it to you right here. It is an interesting chart to look at. Here's the chart. What are NDR's recession models telling us now? And when you zoom into it, you can see this thing. I mean, in my opinion, when I see a chart like this, it's not particularly useful because look at how early of a lead they gave you for the recession of 2008. Right here. Basically, the recession already started when you were over a 30% chance. And these are the same bros that, you know, in August had a 40% chance of recession in the United States. Okay, so not a very useful chart in my opinion. But another thing that's also kind of interesting is if you go back to, where was it? Oh, it was one of these charts in here. Recession likelihood, look at this. U.S. recession probability based on on state conditions. Okay, what's fascinating here is look how you had this sort of like double dip. In fact, you saw this in 89 as well. See, look at this. Recession odds spiked, dipped. Oh crap, now we're in a recession. So it's sort of like, oh no, recession odds are going up. Nah, bro, we're fine. Crap, we're in a recession. That happened in 89. But look at this. It also happened in 2007. Hey, bro, we're going into recession. Nah, man, everything's fine. Lehman Brothers collapses. Oh, crap. Oh, no, there might be a double dip. Oh, my gosh. It honestly, it makes me think you can't listen to half of this stuff these people are saying because I feel like they're just spitting in the wind and hoping the wind changes directions. But anyway, kind of interesting. At the same time, you do get layoffs, right? I mean, you're seeing them, but you get this every January, right? I mean, Amazon's forcing people back to work. There are stories about how people are running out of desk space. Chevron cutting workforce by 20%. Blue Origin, Jeff Bezos' space play, cutting 10% of its workforce in a global restructuring. But then, you know, you take that and you flip over and you say, okay, well, how are companies doing? Well, when you actually start looking at fundamentals, although, I mean, I know a lot of people don't because you don't have to. I mean, you could just buy a stock and it just goes up. Sort of the market we're in right now. I'm not advising that. I'm just observing that. But look at a company like AppLovin. I mean, this is like absolutely incredible. Let's see here. This is AppLovin. Let's get rid of this little sidebar thing here. There we go. All right, look at this. Revenue has exploded like 42% at this company year over year. They're an advertising play for apps. So like, you know, apps on your phone, in-app ads, right? And their sales actually decreased about 3% year over year last year. And even if you remove the tax benefit, they still have 37% net margins. Now, their valuation, you know, they're trading for like a 2.4 peg, which is somewhat okay for a software biz. They've got nice cash flow, a couple billions a year, but you know, they're also like a $130 billion company, so it's a smaller percentage of the total business. But this company prints money, like absolutely. This is like a printing press of money. Now, I don't have an investment in the company. I wish I did, but I was just analyzing this morning with our course members, and I'm like, you know, the balance sheet's okay. It's not like Palantir strong, but this is very good. And this stands in contrast to a company like Trade Desk that I'm honestly vomiting over because first things first, we gave a warning to course members about Trade Desk in January. It was, I think it was January 22nd. Look at the warning that we spotted, and I'll tell you where we saw it too. This right here was the warning. This is the Netflix earnings call, and they say, the biggest initial benefit we have of using our own ad server is enabling us to offer more flexibility, more ways of buying for advertising, fewer activation hurdles, and just improving the overall buying experience. So I wrote, not great for Trade Desk if Netflix prefers their own stuff. And so I foreshadowed, hey, like, this is bad. If companies start in-housing these ad services like Amazon or Disney or Netflix because they realize they could use less complicated software, more streamlined products, and ultimately keep more money for themselves, then Trade Desk fails. Trade Desk could vanish. They were great because they were one of the early plays in connected TV advertising, but you could now literally go down the poopy doopies because companies like Netflix are like, bro, we don't need you. We're just gonna cut out the middleman. We don't need a broker in the middle of this. We have plenty, we control the supply because we make the movies, and people contact us to place ads. What do we need you for? To try to sell our ad spots. We got plenty of people who want our slots. So that was a really big red flag. I mean, massive red flag. And we talked about it with course members because this is what we do. We do fundamental analysis all the time, in addition to technical analysis. Get the course member live streams. We were live for like an hour and a half this morning. You really want to be a part of it and be part of the live for more than an hour and a half this morning. You get lifetime access. You pay once over at meetkevin.com. Use the coupon code before the price goes up. But what I want you to see, which was absolutely mind-blowing, and I'm not going to go through all of this because there was a lot that was mind-blowing in this, but I want you to see this one section here. This was crazy. You ready for this? This is part of their business plan. And they write, here. Some evidence suggests the substantial majority of spend is going through blah, 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 routed through Google's own platforms to YouTube, blah, blah, blah. Whatever happens with the trial decision, Google will likely distance itself from the open internet. If and when Google exits the open internet, they will leave a big hole and a big opportunity for the rest of us. What? Did I really just hear Trade Desk say, hey guys, we're gonna do great when Google leaves the internet? This is like, I mean, I hate to use the word, but it's like financial retardation. Okay, this is like, are you kidding me? This is what who is this, the CEO or the CFO? This was the CEO, Jeff Green of Trade Desk. I think he actually lives in Thousand Oaks. Tell me I'm wrong, Jeff. Let's go to coffee. I'll come up to Westlake. We could go to, one of your little bougie restaurants over there or whatever. And let's understand why you would say this and why I'm wrong to interpret that this is basically something like, hey, if Elon decides to retire, House Hack will do well. That's like, what do they have to, what? Like, that doesn't even make sense, right? I still think diversifying into real estate right now is a really good idea, especially with where some valuations are. But I'm a little biased, okay? I like real estate a lot. It's because maybe I'm just a boring person, I don't know. But anyway, they literally then start bitching about Amazon. They're like, we should wait for people to stop supporting Amazon because Amazon sells products that could compete with customers of Amazon. So there's a conflict of interest there. Trade Desk is great because we're objective. And I'm like, no, y'all are smoking crack. So, and then you look at the market today and Trade Desk is down 30% on missed guide and missed earnings. And AppLovin beats earnings and guidance by a lot. So, you got one up 30%, one down 30%. I'm like, oh, this is going to be overblown for Trade Desk. I went into Trade Desk thinking maybe this is a great time to sell some puts, which honestly, even though I'm pooping on it right now, it could be. Unless the broader market sells down, it could be an interesting time to sell puts because volatility is going to go through the roof, right? But anyway, I'm looking at the earnings call. I'm like, oh, no, this is actually bad. That was something else. Anyway, so that's AppLovin and Trade Desk. Something that I want to hit, though, is the Wall Street Journal is complaining about Donald Trump because they're saying, like, hey, Trump, isn't it backwards that you're clamoring for lower taxes, yet you're trying to get, higher tariffs? Honestly, have we not realized the playbook yet, that most of this is just negotiating? Now the current tariffs they're announcing today at 1 o'clock are going to have a starting date of April 1st. So it's like, bro, that gives you like 6 weeks to negotiate this stuff. This is what is this, like a joke or something? April 1st. We all know what April 1st is. It's Lord and my anniversary. House GOP aims for tax cuts of $4.5 trillion. That's great, but they're two-parting this, which is not what people wanted. Trump wanted a one big beautiful bill, and instead it looks like they're going to go for about a $350 billion package first, focused on border security and national defense, and then they'll work on the tax negotiation later for, Social Security, tax on tips, extending the 2017 cuts, salt tax deductions, all that good stuff. So this is all going to be very interesting. Trump Media boss, by the way, not to be confused with Trump Media Group, but Trump's FCC chair is now apparently investigating NBC for promoting DEI. Now they're potentially opening cases against multiple media outlets like CBS, thanks to its edit of the Kamala Harris interview. It's actually really interesting because you straight up have basically Trump without any shame going, let's put a pit bull in at the Federal Communications Commission and go after the people who were mean to me while I was running. It's like, all right, well, I mean, you won, so I guess you get to. But anyway, there's also this drama about Tesla potentially getting a Biden contract for armored Teslas. It literally in the government documents, it says armored Teslas and $400 million worth of those. Then, of course, Elon Musk writes on X that this is fake news and that he's not aware of any $400 million handout. Apparently, this was a Biden proposal, and then what they did is they actually just went back and edited it this morning, and they changed it to armored electric vehicles from armored Teslas. So it looks like they were supposed to go to Teslas from the Biden admin, but now they're realizing it. They're like, nah, let's edit that. We don't want to make it seem like, contracts are flowing over to Tesla from Elon's influence in the government. But then, like, the cat's out of the bag, and Tesla stock's actually up like 4% today on this impression that, yes, actually, we might exactly see Tesla, certainly SpaceX, get more business because of their connection to Trump. Especially since, Trump is now he just got signed an executive order getting rid of the anti-bribery law that existed. The executive order is called Pausing the Foreign Corrupt Practices Act Enforcement to Further Economic and National Securities. I can't help but think, like, some of the cronies inside of the Trump administration are like, hey, bro, sign this. It's good for the national defense and economy. And, like, I'm not trying to say Trump's like a puppet here, but he signs it, and, like, all of his cronies are like, so what you're saying now is we could start accepting red envelopes and assigning government grants and projects? Yeah. And then not potentially, get in trouble for that? Now, technically, if you read the executive order, this is only a 6-month pause, and so there could be bribed enforcement after that for what happened during the 6 months. Some people say companies are going to go to, countries around the world, start accepting bribes and start building infrastructure, that this loosens deterrence against bribery and corruption. Others are like, who cares if it benefits the U.S. economy and people want to be corrupt? They're corrupt anyway, so let them be corrupt. I don't know. I guess, let me just put it this way. It wasn't on my bingo card that Trump was going to get rid of anti-bribery laws. It doesn't exactly smell good, but who knows? I guess we'll see what happens. My initial gut is this is probably a bad thing. But there's also the argument that in the short term, maybe it just expands the bubble and you can make some more bank in the meantime. Not saying it's a good thing at all. But anyway, the odds of a ceasefire, which this I actually like. Trump is open to talks with Putin. If he talked to Putin, he also talked to Zelensky. Highly productive phone calls between the two leaders, Trump and Zelensky, and then Putin and Trump. They believe that they'll come up with solutions soon. One of the potential solutions is military support for Ukraine in exchange for the United States getting rare earth minerals, which is brilliant because it's sort of like, hey, why are we giving so much and not getting in return? So that's kind of interesting. But, the betting markets now have a 69% chance at ending or getting some kind of ceasefire between Russia and Ukraine, which I'm all for because I'm tired of seeing people die. Trump is now apparently using the U.S. military to surveil and conduct a reconnaissance on the cartels over Mexico. That's kind of entertaining. And Friedrich Merz warns that Elon Musk could end up facing consequences for boosting the Alternative für Deutschland on X. In case you don't know, everybody in the media calls the AfD the far right organization that's too extreme and they're gonna be turn into dictators like Trump. This is what people say. Okay, I'm not saying I say that. But other people say, well, the AfD, for the first time in a very long time, is actually getting a good amount of votes. So they could end up getting 20% of the vote in Germany. And even though the CDU is expected to essentially get the most votes and then form a coalition with other governments, Merz says there's no way, basically, in hell he's going to partner with the AfD because he sees them as far right-wingers, and potentially wants to punish Elon Musk for promoting the AfD. AfD is also very, anti-immigration. Please, get the Muslims out is sort of the argument there. Yeah, I'm not saying that. They're saying it. It's not exactly helped, but, by this fact that an Afghan 24-year-old rammed 28 people and injured them. No word yet on any deaths, knock on wood, in Munich today, which is just this needs to stop happening. But anyway, Merz says that Elon Musk could face consequences for boosting the AfD on X. He says it could be a political response, it could be a legal response. He wants to analyze this after the election, and says that he might actually leave some consequences on the table for Giga Berlin. So, if the leader of Germany potentially has control over one of the largest factories that Tesla has, it could put a little bit more of a poopy-doopy on at least some of the margins that Tesla has. I don't think they're going to shut them down because that would cost jobs, but there are potentials for sanctions or fines or whatever. I'm not saying anything is right. Again, just sort of reporting the news here. Again, kind of still think that anti-bribery thing is a little interesting, but okay. Anyway, PPI was slightly hotter this morning. Jobless claims slightly lower. Honestly, the more you look at this stuff, and Robinhood is blowing up because they see revenues doubling this year, especially because they're calling prediction markets the future. I mean, the more stocks go up, and EBITDA, the more stocks go up, the more Hood goes up because people are trading it on Hood a lot, right? It is a little bit of a crazy time right now because everything's just kind of going straight up. I mean, I can't help myself but feel like we're sort of in the lead up to December of 2021. But I don't know what the catalyst is for being bearish, so I'm not going to tell you to be a dirty bear. In fact, I'll tell you that's a pretty lonely world to be in. I wouldn't know. So this morning I sent out a daily... is that it? And Dutch Bros is doing that. Yeah, Dutch Bros, nice move there on margins too. But this morning I sent a thing on the Daily Wealth, basically argued that boredom is a good thing. So if you're stressed and overwhelmed because you have too much on your plate, it's really important to start axing things off of your plate so you could stop being stressed and overwhelmed, and you could actually let those creative juices flow again and the doors can open. So it's one of the reasons I want to just consolidate, close doors where they don't make sense in my life right now, and then let myself focus on where things are really profitable and really doing well. Specifically, House Hack, absolutely dominating. Especially with what happened in California with the fires. Let's just say a lot of our real estate probably went up in value because of I'm just saying. Anyway, so... that's what I got for you. If you want to join the courses on building wealth, check them out over at meetkevin.com. We talk about the lines every day. We talk about you'll know about the two lines that the Qs are playing right now, and you'll know how to trade these too. We'll talk sold calls, sold puts, short puts, short calls basically, and then also purchased, long calls and puts. Anyway, thank you so much for being here. Appreciate y'all, and we'll see you in the next one. Thanks so much. Goodbye. Good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.